say thank you. Thanks for the time. I know time is valuable. It's limited. And so I appreciate being able to meet with everyone here today and share some things that I've learned. I've worked very hard at trading. I started, as Dan mentioned, back in 1997. And I think for most people, it's been a winding road. It certainly has been for me. Lots of struggle, some excellent, crazy profitable times, and then also some tough soul-searching times where I think, am I really cut out for this? Or should I even keep going? Among other thoughts. And so anyways, today's presentation, I wanted to cover some just universally applicable areas that I think could benefit anyone who's either actively trading or considering getting into trading if you're new to the markets, how to progress from break-even to winning trader. So as you start out as a trader, you think, oh, I'm just going to make money. And believe it or not, being a break-even trader, and I've worked with hundreds of traders now, becoming a break-even trader can feel like an accomplishment, believe it or not. That's how difficult trading can be. And so with regard to getting started here, I'm going to cover a couple of different things: weeding out losing traits and also building proven winning habits. And so there'll be some specifics that I'll go over. We'll have some examples that hopefully you guys, if you have a trade setup that you like to use, go ahead and send that into chat, because that will be applicable here in just a little bit, and I'd like to be able to use something that's relevant. And so if you have a trade setup, and it doesn't have to be elaborate, the more simple the better, go ahead and put that into chat, and then I'll be able to, we'll be able to use that here in just a few minutes. And if you would, just to get started, I just want you to think about for a moment a whole other profession. It can be, let's say, the legal profession. You think about what's at stake, first of all, in the legal system. You've got some either minor or major consequences, but you have consequences. If it's a misdemeanor or if it's some traffic situation, it involves, you pay off something and it's all done. If it's a major situation, your life can be dramatically changed if you're guilty of something. And so if you look at the legal system, when you have something at stake, when you have consequences, the more order that can be used and relied upon, the better you're able to find clarity, and the better you're able to produce somewhat of a consistent result. And so with regard to trading, we have, like Peter talked about, Peter Davies at the very start of this today, he talked about, time is a limited resource, and we all know that, but sometimes we can forget that as traders because we're so fixated on becoming a success, we can spend a lot of time spinning our wheels. And so we've got time at stake, we've got money at stake, and then, of course, our own personal feelings about how well we succeed. That can affect, whether or not we feel good about ourselves or depressed, things like that. And so the reason I'm talking about this is, with so much at stake, having order, introducing the concept of order, introducing the idea of prioritizing an ordered approach, a sorted approach, a methodical approach, should be a high priority. And I know from my own experience, using things like a checklist, writing out a trade plan, are not my most favorite thing to do. I mean, that's how I am. I'd rather do something than talk about it and write about it and all these different things. And so, and you'll see as we go along, I've kind of built these things into my system rather than writing things down all the time. But having order, having a sorted approach is exceedingly valuable, especially when you have something very valuable at stake. And so some losing traits: tunnel vision and having a lack of structure. I mentioned I've worked with hundreds of traders. Pardon me. I've mentored traders, trained on specific aspects, working at the proprietary trading firm, worked with other traders naturally as part of being there. attended different events where I share information on how to apply specific aspects of trading. So I've worked with a lot of different traders, and these are common present elements among struggling, losing traders. And so tunnel vision, lack of structure. Let's talk about tunnel vision for a moment. And this is where if you have a trade setup that you use, and if you don't, that's fine. I can do it without you, but I would much rather someone share something, but I'm just not seeing it, but maybe I'm just not seeing it. Okay, so that's fine. So let's just go with something very basic. Either I'm not seeing it or you guys have not written one bleeding letter to me, but that's fine. Let's think of a simple trade setup, a engulfing candle, an inside period. What I'm talking about is a high that's lower than the previous period's high and a low that's higher than the previous period's low. So it's an inside period, and it goes by different names, but that's what it consists of. And so tunnel vision is when a trader has a trade setup, such as what I just described, and they seek to apply it because they've seen examples where it works, or maybe in the after hours, when the market's not so active, it's 5:30 in the evening, you've had a tough day, you come across a trade setup, and you say, well, let me see if I should have done that today. And so then you find something, and you look, and you can find example after example after example of, aha, this is such a nice setup. Look how much it works. Look how well it works. And then the next day, you decide, or maybe once Asia gets going in the evening, for us here in the United States, evening or afternoon hours, but wherever you are in the world, you start to then look for and use what you just fell in love with, this trade setup. That's tunnel vision. And there's a difficulty that comes along with that. That's a losing trait, to use a trade setup and say, I'm going to hang my operation, my trade approach, everything, on waiting for this 1-2, and then I'm in. It leads to frustration. It leads to difficulty. Lack of structure is a losing trait. So kind of going along with tunnel vision, lack of structure is trading. I don't know how to put it. I'm trying to put it without sounding like a jerk. Basically, by the seat of your pants. So some days you might say, well, this is a trend, and this is why. And then other days you might take a trade outside of your parameters because you're not really attached to them. And so it's not that you don't know things about how to structure your approach. You may know a lot of things, and you probably do. But whether or not you're attached to them, whether or not you believe in them to the point of having confidence, depends or determines whether or not what you know is actually useful to you, whether or not what you know is something you can actually benefit from. And so that's a lack of structure, either not knowing, and that happens too. There's all you might be a newer trader, or you might have been around the markets a long time, but simply been attracted to information that doesn't really inform you of structural elements that the market produces and develops on a daily basis. Or you've learned lots of different structural elements, all of which are somewhere in your mind, and at certain times are applicable and at other times are ignored. And that's from personal experience. I've been there. I have, like I said before, I have struggled. It's not like I waltzed into trading and just have only succeeded the whole time. I did when I started, and it was kind of like it made it doubly hard, as I started out and was like a winning machine for my first, I don't know, month and a half. And so here I got this first impression of trading of like, wow, this is, I think in that period, if I remember right, I think I made about the same amount of money as I made at my full-time job. And so it was quite a start. I mean, I was just bedazzled with trading, and then all of a sudden, boom, bam, one day, orange juice futures shrugged me off. I lost a little. And I knew I should have taken that trade again. I didn't. And then my next trade, Swiss franc, back in those days, Swiss franc futures, gave up some money there, and then it kind of it became turned into a dogfight really quickly. And so I very soon after my run of I can't believe how easy this is the best way ever, I'm going to quit my job soon, it very much so reality set in pretty hard soon. And so I know the losing traits, I've lived them, and then also I know the losing traits from the other side where I've seen them in other traders and helped individuals get off of that track and let go of those old beliefs, let go of looking at things that are less relevant and start using more useful information. Okay, so that's where I was going to have you guys provide a trade setup and you didn't. That's fine. So why use barricades? Okay, we're talking about structure here. So market structure, why use barricades? I oftentimes, when I talk about trade barricades, I just simply explain it as it is a reference that gives us a chance to distinguish relative motion. And the way I think about it, I've just imagine looking up at the sky and you see a jet flying and it's cruising along and there's not a cloud in the sky. It's a clear, perfect, just one of those Southern California days where you can't find a cloud. The plane is going 600 miles an hour, but there's no way of knowing because there's no reference point. There's no clouds. It's not passing. It's way up high. It's not near anything. And so it's just simply a very calm, very quiet, very slow moving appearance because there's no point of reference. There's no sense of relative motion. Now you take that same jet and you lower it like you're at an air show, one of these stunt flying type air shows, and they're not far. I mean, they're within maybe 2,000 feet of the ground. No more than 3,000, I don't think. You could look it up, and they are screaming past. And they're probably going half the speed as that jet that you saw way up high, 5 miles, 6 miles above the ground. So relative motion, that's why we use barricades in terms of structuring the approach that we take to our trades. We have to, at first, the market has to, and it does develop barricades. That's very apparent. Look at a chart and you can see very easily a location where the market tests it, bounce, tests it, bounce, tests it, bounce. And so the market produces barricades, but do we recognize them? And once we do recognize them, we're in a position to then start to gauge progress. We're able to recognize, thanks to the barricade, we have a sense of relative motion, and we can see, is this market actually accomplishing something of note, or is it just maybe behaving in a flashy way, but within parameters? It hasn't broken out of its normal. And so that's one answer to why you want to start using barricades, and how a lack of using them can very easily, you ever feel tossed around by the market? You get in, you think you're right, you believe in it, you're okay, I'm doing it. You get in, you get beat up. Then you think, man, that hurt. I just got beat up pretty badly, so I must have just gotten it wrong. Well, if I'm so wrong, why should I live in slow motion? Why don't I get ahead of the game? So then you take a position in the opposite direction, and you think you're being smart, and you think, okay, now I'm going to just grab a hold of what just beat me up. I'm going to be the winner. And instead, the market then beats you up again. And then what happens? It's a question of how soon do you recover from that injury? How soon will you believe in yourself again? How soon will you believe in whatever approach that you think you might want to use? How long before you believe in that again? And so it can be a tossed around experience. And so by using barricades, you can prevent that feeling of being tossed around. Once you have barricades that you recognize that are real, that consist of substance, it then gives us a chance to measure progress, which is what I started to talk about. We're able to get a sense of relative motion and see, aha, the market is not just making noise within its current realm of normal. No, now it's passing outside of. It's creating a new normal, which markets do this all the time. They define, break, and redefine their current definition of normal on a routine basis. And so by having barricades and then by being able to measure the progress outside of those barricades, it then gives us a chance to do what? Anyone have a guess or care to say what you know? What are we in a position to do? We've got a barricade. We then see the market progress. And so then what are we in a position to do? Okay, I think I see limit the risk. It's in the questions. I still don't see anything in chat. So I'm just going to continue on. That's fine. Maybe there's a difficulty. I don't know. It's okay. We're in a position to now trade in sync with the market. Reminds me of a saying, and I saw this in a trading book. I don't remember which one. It's been at least 15 years ago. It said, whoever rides on the back of a tiger goes where the tiger wants to go. Okay, so we are not in charge of the market. We know that. We are on the back of something bigger and stronger than us. So getting in sync with it is priority number one. And by doing just these two things, we're in a position to do that. Lack of structure also includes trading in poor location. And so what I have written here is mispriced location. And what I mean by that is what we're very familiar with as consumers. We're very familiar. Also, I would imagine most anyone here buys Coca-Cola. You purchase Coca-Cola soft drinks. What I mean by mispriced is you're walking through the store, you have 24 cans of Coca-Cola in your fridge, you do not need any more Coca-Cola right now, but you're walking through the store and in the center aisle right in front of you, there's a sale. And instead of $7 for 24 cans of Coke, it's only $4. And you put it in your cart without thinking twice. Why? Because the Coke is on a bargain discount sale. It is mispriced relative to what you normally pay. And so if you normally pay $7 and it's at $4, the idea, the belief that you pin your purchase to is it will soon be $7 once again. This $4 price deal is not the norm. And so applying that to trading, when we have a barricade in place, when we can measure progress, we have a sense of relative motion, we have an idea proven by market structure that the market is actually moving in a given direction, that normal is shifting, we then have the opportunity to recognize, in reality, recognize a mispriced situation just as easily as we recognize Coca-Cola on a sale. And so many struggling traders fail to have this structure in place. They do not trade at mispriced location. They trade in a less organized manner. And then lastly, a lack of structure consists of failing to use real-time proof of resumption. And so real-time proof of resumption, where would we get that proof, do you think? And again, this is open to anyone here, so if you have a comment or an idea of where would we get real-time proof of a move's resumption, where would we get that? Okay, T-Pain. Your name's fun to say, T-Pain. T-Pain says order flow. Okay, thank you, Nigel. You don't see the option for chat. That's fine. All right, and it looks like Robert, you may have said something, and Tony. Okay, so I'm trying to see this, but it is just, I cannot expand it for some reason. So if I don't, anyways, we'll just keep things moving. Real-time proof of resumption is in fact provided by order flow.